To have you. What's your sense on the crude oil price? Is very volatile, and we are awaiting the ECB monetary policy meeting today. Of course, ahead of that, it is quite a bit of a choppiness that we've seen in all asset classes.
Yeah, absolutely. Look, I concur with your previous guest that we think that crude oil prices can sink much further here. We're not quite as pessimistic. At UBS, we think that around the sort of the $40 mark, we'll actually start to see some people coming back to the market and start to buy crude oil again, because on a 12-month basis, we see it heading back to that $55 per barrel type mark. But still, the general sense is that crude oil can sink further here and should sink further, largely because we are seeing some of the outages that tightened up the market in the second quarter are starting to come back to the market, and we're starting to see a bit more supply lurking around. We're also coming to the end of the US driving season, which of course puts greater pressure on refinery margins, and that should also push downward pressure on crude prices.
I mean, that's about crude, but you track a whole host of commodities. How do you look at the metal space? Because that really has been buzzing, and we've seen some fresh highs coming in today yet again.
Yeah, sure. On the metal side, we're quite constructive on things like nickel as well as zinc and lead. Zinc and lead have had a very good run, however. But particularly on nickel, we can see a decent amount of upside here. We're less constructive on things like copper, largely because the private investment side in China continues to sink away, even though government expenditure has been quite strong on infrastructure and so forth. But on the private investment side, it's quite weak. That gives us some indication that the housing market continues to cool in China. The prices are doing quite well, but overall construction looks far more modest. So we think from the copper side, that's a negative signal.
When you spoke about nickel and zinc, and while copper prices have gained just about 6% in this year, we've seen something like zinc gain up by 40%. So it really is in small pockets that we've seen the metal prices gain. Do you see this trend continue? I mean, it is very, very fundamental specific that we see moves coming in as.
Yeah, the reason why we've been quite supportive of these metals for the last few months is because all of the metals in lead, zinc and nickel are starting to face supply-side constraints. So we've seen stocks, particularly in nickel, stocks are very high at the start of the year, and the commodity tracked to very low levels, in fact below the cost of many producers. But now with the Philippines stepping out of the market a little bit, constraining supply around environmental issues, we can see the Indonesians able to fill that gap a little better. But nonetheless, the market is still quite constrained in the short term. For zinc, we think prices have had a pretty good run, and we wouldn't be jumping into the zinc market at this point. Nonetheless, the tightness in the market can support prices here for longer. So not a sell-off situation, but certainly we're getting to the end of this run, particularly for zinc and lead.
When coming on precious metals also, and we have seen a profit taking here as well. It started very strong, the first half for this sector. How do you see the second half panning out?
Yeah, it's been interesting watching gold. Gold is effectively trading a Fed view. As the data in the US began to improve, we saw ISM last month. Payrolls were much, much better than they were the previous month. We've also seen retail sales very strong. And so that's had an impact on precious metals. We've had a pretty sideways view on gold, in particular for the last couple of months, around this sort of 1,300 mark. You could expect that investors, if the Fed do intimate next week that a hike is a proposition which is closer than currently the market pricing anticipates, which is sort of the start of next year. So if we do get a Fed rate hike being pushed into this year, what you'll find is that gold prices will come under more pressure. We think actually silver is one that will come under more pressure than gold. So on a preference list, we would prefer silver over gold. But overall in the market, we like the PGMs here, largely because investors don't own a significant amount of PGMs, and the industrial production story starts to look a little bit better, which is good for PGMs relative to that of gold.
Wayne, thank you so much for